Hello Seeking Alpha community. Thank you for joining me. I'm going to walk through Seeking Alpha's premium tools and how they help me build an investment thesis. So if I come onto the Seeking Alpha website and I type in the name of the company that I want, I come up with ServiceNow. I come onto key data and I look at the company's income statement. At the moment, it's on absolute revenue, and you can see that ServiceNow's revenue stream has grown substantially from 2012 when it had 240 million to present time over the trailing 12 months 3.4 billion. ServiceNow's trailing 12 months happens to coincide with its 2019 full year, so you can see that here. If you click on year-over-year growth, you can see that since 2012, ServiceNow's revenue growth rate has very steadily declined. Furthermore, ServiceNow is a SaaS, is software as a service platform, so that means that it should have quite a stable recurring revenue stream. Investors are pricing in that level of recurring revenue stream and they're hoping for growth. So this is where the thesis has some wiggle room. So if I click on as a percentage of revenue, I can see that ServiceNow's gross profits are expanding. This is great. This shows that the business model does work, because once the customer comes onto the platform, they stay on the platform, and it just stays for on ServiceNow as a kind of a recurring revenue stream. They don't need to kind of get the new customer onto the platform. Similarly, you can see that its business model is working because its SG&A is decreasing over time. This is great. So it means that customers come onto the platform and ServiceNow's operating leverage is able to expand over time. So far, it seems to be working very well. Then we see, if we go back, we see that for the trailing 12 months, for the last year, the revenue growth rate was approximately 33%. If we click on value and we scroll down to my preferred metric, these are lots of metrics that Seeking Alpha's tools offer, you see price to cash flow, trailing 12 months, has a D rating on the quant, and it's pricing at 38 times trailing cash flows. So ServiceNow is growing at approximately 33%, and investors are pricing in on a price to cash flow 38 times trailing cash flow. So ideally, for it to be a rewarding investment, you want to be underpaying for future growth, not overpaying for declining growth. So this leads me to believe that ServiceNow's business model is overpriced. If we can compare to ServiceNow's peers. If we click on the peers, and you can see several of ServiceNow's peers. Arguably, its closest peer could be Atlassian, and you can see from a value perspective how the peers are rated. You can come and customize the peers here. If we were to pick, if we're going to go back into the key data and look at ServiceNow's cash flow statement, you can see here stock-based compensation remains flattish. It grows, but it doesn't grow a tremendous amount relative to the amount of revenue that they're bringing in. So that's great. But you have to remember that the stock-based compensation is a non-cash charge. That gets added back on the cash flow statement. So the cash flow from operation looks strong and stably growing. But if we go back to the income statement, we can see that once all that stock-based compensation gets added back, the more the ServiceNow grows, you can see that its operating income becomes quite negative and is not really getting that leverage that we would have expected from the amount of revenue growth that is posting. Now, let's say I know that the economy is going to go into a global recession. Will the number of new companies adopting ServiceNow for their digital transformation continue to increase or decrease? Let's say that I have a thesis that as we hit a global recession, many companies are going to be struggling for survival. I believe that many companies will seek to defer any type of IT spend. So that would cause ServiceNow's business model to struggle because it needs to have new customers coming onto the platform to grow its revenue. So although it has benefited significantly in 2018-19 as the economy expanded to its fullest, if the economy contracts, it's not able to get its revenue growth rate to increase, it will continue to decelerate. And I have a thesis that we're going to see its operating income turn significantly negative. Thank you for watching. Goodbye. As a final note, I should mention that you can extract and play around with all this data on an Excel file. Thank you.